So the stock market has been through, as it always is, like a roller coaster ride, and has been bumping up recently various days at record highs. And so what happens is people become so optimistic and think, because of what's known as recency bias, that whatever the market has done recently, that's what it's going to do going forward. The reality is, U.S. stocks are priced really high. Could they go higher for months or years forward? Sure. I mean, not straight line. It's the roller coaster ride up and down based on different conditions. The reality is, values are very pricey because we've had this period of time that we now have falling inflation and surprisingly strong economic activity that nobody expected. And then the question is, well, what could go wrong? Who knows? You could come up with a list, what I call the wall of worry, not my original phrase, of all the things that could go wrong in the world or in the United States. So my thing is slow and steady wins the race. There's a guy who's retired, semi-retired, whatever, Jason Zweig, who has written about Wall Street forever. And he decided, I guess in semi-retirement or retirement, to take months off from paying any attention at all to financial markets. Didn't read any news, didn't follow what his holdings were, nothing. And then he looked months later, he's like, oh, wow. Okay, so things are all right. The whole idea is that he has a diversified portfolio, and Jason's just letting that portfolio ride for the long haul. But what so many of us do is we get caught up in the energy of the moment with investing. And we react as a result emotionally, putting money in, taking money out, whatever, chasing the hot stocks, whatever it is. My thing, and anyone who's listened to me over the decades knows that when people are really focused on this with a lot of anxiety is when the market, for whatever reason, overall is having a big decline. That in those circumstances, you always hear me say, what game are you playing? Are you playing a long game? Are you playing a short game? Are you diversified? Do you have your money spread out across various types of investments? And I remember in times where we've had these huge market declines in very short order, like we had 16, 17 years ago, there was a lot of panic selling, and people went to the sidelines and waited till things were safe. Well, by the time people had confidence to get back in again, they had missed not only the decline, but they missed a lot of the recovery and baked in permanent reduced returns by having gone to the sidelines. My thing today, I will tell you that I believe that markets from here are more likely to have less return moving forward. Didn't hear me say no return, less return, because of the big gains we've had of late. So what do I do? What I do is everything for me is diversification. So what do I own a lot of that most people don't? I'm not advising you to do this. I'm just talking about the concept of being well diversified. Domestically, I love total stock market index because I own little pieces of American capitalism, from the largest enterprises to many of the smallest publicly traded enterprises, thousands of stocks. I want to ride with American capitalism. But there's something else I do most Americans are not comfortable doing. And that is, I own international funds, international index. Why? Because a lot of foreign entities, a lot of foreign countries are going to have more economic growth moving forward than we will because they're going from a smaller base, a lower income base. There's more room for economic activity, for economic growth in less developed economies, and also being diversified with economies overseas. That's my thing. I'm not saying it should be your thing. What I'm saying should be your thing is it's a big mistake to try to time the market and a big mistake to try to have concentrated bets where you're saying, oh, I want to hit the big score, so I'm going to go in blah, 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 because that's the next Microsoft or the next Apple or the next Google or the next, what do they call Facebook now, Meta, whatever, that people want to be in the next whatever that's going to hit not a home run, not even a grand slam home run, but way beyond that, be the New York Yankees in their prime. The point for you that I'd like to make is the news of the day is not how you should decide to buy or sell. The tip you get from somebody in the bar or wherever, that's not how you should decide to stake your game for the future. That really, for most of us, unless this is what you do every day, all day long as your job, is widely diversified. Now, I found out recently my teenage son owns crypto and has a crypto wallet. I didn't know that, Krista.
Wow.
Yeah. Does your son, is the same age, have a crypto wallet?
I don't think so. He doesn't have enough money to create one.
Well, so I'm asking Grant, not passing any judgment, I'm just asking him, trying to get him to explain. And it's all about this mentality that there's going to be this big score. Mm-hmm. And that is such a natural human thing. Why do people line up when they're doing those big gamey, Powerball-y thingies when the jackpot gets to be 1 billion whatevers or 800 million whatevers? And I'll tell you why I call them whatevers in a second. It's all about us trying to do a shortcut in life. And my son will figure it out. He's a smart kid. But ultimately, you do the basic blocking and tackling. You live on less than what you make. You save money. And you invest money for the long term, intermediate term, and save for the short term. I'm dull. I am dull as dishwater. But the idea is I want to be able to have financial security long term, and that's how you do it.
And, we all make mistakes. I remember, how many years, 20-some years ago, $500 worth of Webvan. Remember Webvan?
Oh, do I remember Webvan? I used to love getting our groceries that way.
I was so excited about Webvan. They were way ahead of their time. But unfortunately, I lost that money. And, it doesn't sound like, it wasn't, it felt like a lot to me back then. It was not, I knew I could lose it, but I really hoped I'd have a big score, and I got nothing out of it. And I remember it. It sticks in your head when something like that happens. So
I remember in my TV work, I went out and I went to a Webvan warehouse, and I was filming how they, taping, can't say either of those words, for digitizing, whatever. Back then we were filming the Webvan warehouse, and we'd see how an order would come in over a computer and how the robots would come and grab the stuff, and it would go in the colored baskets, and they'd go down the line, and they'd go right to the delivery van that was going to take the refrigerated, frozen, and room temperature items. And I was just absolutely blown away. I thought this was going to be the future and all that. And truth is, every one of us who ever got a delivery from Webvan We can thank the stockholders who lost all their billions in Webvan.
You're welcome for my tiny contribution.
Yeah, for making it possible for us to get groceries delivered at a cheaper price than we could buy them at a traditional supermarket. There were a lot of things like that. So there's nothing wrong with doing Explore, where you take some money and it's your Vegas money, and
Right.
you throw it into a stock. But you have to start with what Chuck Schwab always called the core, where you build your portfolio that is your everyday portfolio spread across the markets. And that's what it's about. Now, I said about the lottery tickets, I was going to say, what do I mean about thingies? Well, because they always say, $800 million to one person. And later you find out they got a fraction of that, because instead of that 800 million is paid over 20, 25, 30 years, whatever, before tax and all that. So what somebody actually gets is still a lot of money. It's just not what you see on the electronic billboards as you drive around the nation's freeways.
Got to be in it to win it, though.